Welcome to ISE's Equity Index Weekly Outlook, a weekly outlook on ISE and other industry indexes, hosted by Patrick Ceresna, a derivative market specialist and investment manager with extensive expertise in options and the broader derivative markets. ISE trades options on more than 15 proprietary sector indexes, as well as broad-based indexes and a variety of licensed benchmarks. ISE continually enhances its trading systems and develops new index options products to provide investors with the best marketplace and investment tools to trade smarter.
Hello and welcome to the ISE Equity Index Outlook for May 9th, 2011. This is Patrick Ceresna. As always, we start off with the S&P 500 using that SPDR exchange traded fund symbol SPY. We were looking for the highs of the second quarter to come in somewhere around this 136 to 139 area, and when a couple weeks ago when that flagging formation held, we were targeting a rally that would come right up into that zone. Subsequently last week, when the US dollar began its big rally and commodities started having that significant reversal and decline, it subsequently created that market weakness that caused the S&P 500 to begin correcting off of those zones. We're now at a situation where we've come off of a very good level for the S&P 500 to be reversing off of. We certainly cannot rule out the possibility that the S&P 500 can come up for like a double top retest up into the zone, or even briefly make a little bit of a higher high. But overall, we believe that the levels that were seen earlier last week are going to be important highs in the much bigger picture, and that the only question in my mind really is what magnitude of profit taking we will have during a corrective cycle within the stock market. If for the bulls case, it would be a very shallow sideways correction over multiple months, and then subsequently the market may strengthen going from the third to fourth quarter. But if we see any really significant declines coming in at some juncture over the next couple of weeks or month, it may spark a corrective pattern in the stock market that might be much deeper, even potentially going down to 118, 120, or even lower during one of those phases. At this stage, it's too early for us to speculate as to where and how far it will go, but right now we are looking for the highs of the second quarter to come in somewhere along here if they haven't already been put in. Next here, I want to take a look at the ISE US Regional Banks Index, which is the symbol JLO. We drew that trend line signifying that if we had any legitimate breakout on the upside out of that zone, it may mean that regional banks could rally all the way back to its previous highs. But with the regional banks and the financials in general being relatively weak, with now the commodity sector is reversing, it's quite possible that the regional banks will not be able to break this line, and if they do end up correcting through the 24 and a quarter area on the downside, there is not a lot of support down below until we get down to the 23 and 22 area on the downside, which would be a significant market correction in the regional banks that have never really strongly rallied in the first place. Next here, I want to take a look at the ISE index, which is symbol SIN. This is an index of all the casino, tobacco, and distiller companies. And more or less, we were looking for the measured move to come to an end somewhere in this 140 to 145 area on the upside. And we now are marking off that focal point as the 140, 142, as we more or less traded right into that box and reversed on the downside. And like we were suggesting with the other markets, there's nothing ruling out this index may now at this point come back up into the 140, 142 area and start banging out some overhead into some overhead resistance levels. But in the bigger picture, we should see a stronger market consolidation in this index somewhere off of these highs. Next here, I want to take a look at the ISE Home Builders Index, which is a symbol RUF. And the home builders have continued to deteriorate in spite of a number of attempts to roll up and break out, in never being able to overcome that $9.80 to $10 focal point on the upside. Create these rejections that have now weakened the home builders index all the way down to this 920 to 930 area on the downside. With us now having broken to lower lows, it's certainly in the cards for home builders to deteriorate all the way down to those lows around the 860, 870 area on the downside. So we'll watch for that follow through selling as below these levels. Next here, I want to take a look at the ISE Natural Gas Index, which is symbol FUM, and just like the other indices, we were looking for eventually the natural gas index to bang out some highs somewhere up along these zones. With the commodity tops being put in, it's quite clear at this point that this more than likely will have become the high of the years, or the high of at least the second quarter on the natural gas index, with that double top and subsequent break of the neckline. This moment, even though we're probably overdue for some sort of a bounce, maybe even back to 135 to 137 on the upside, at some juncture we should see continued selling in this index, not only back down to 125 on the downside, but could even be deeper down